Hello, fellow traders. 'Tis I, TheRumpledOne. It's me again. Okay, part 2 of Trading Fads and No. I started talking about the new indicator and lost track of the time. So you get another video. Lucky you, right? Okay, what was talking about? Talking about the price action training wheels indicator here. But it's not about the indicator, it's about the price action. And I think I was showing you idiot mode here. And I have to remember here from the rat zone. Yeah, we still have that turned on. But the skull hasn't popped up like it is here. So it's telling you not to short. I call it training wheels is because the indicator is just reminding you. So in this case, you do not want to go short above the previous candle's midpoint. So you see here, you're on M15, so don't even think about shorting. If you're on M5, if you're on M1, see, it's opening above. So you don't even think about shorting. That's what it's telling you. H4. Don't even think about shorting. Okay? The daily. Now, on the weekly, it's telling you don't buy. So if you're using the weekly chart, it's below the midpoint. It's saying don't buy. Okay? Even though the H1 is green, it's below the... So this indicator is going to be sensitive to whichever time frame you are trading. That's the way it's coded. Now, if I guess what I could do is I could put in a in the indicator here the oh yeah, I'm still using the experimental version of it. So you see we've got true. You see you don't have any control over the time frame, but now that I'm talking to you about it, I might put that in there, but I hesitate because I'd rather it's you know, we want to have the current whatever you're looking at midpoint, and we've got the H1 that's fixed. So I can always come out with a different version, but I'll figure it out. And we also have the do not trade indicator. So once again, you can, depending on whichever time frame. So if you're thinking about going long here, it's telling you, well, these time frames are saying don't go long. So if the lower ones here are telling you not to go long, but say you're trading H1, you might want to drop down and take a look. Okay, I see why I don't want to go long. See, it's below that midpoint. That's one of the reasons. And the candle color is we've got a bear candle. So there, so you don't want to go long. So that's how this one works, and these are part of the mother load that I put out there for free. So to reply to the one trader that was saying something about, you know, how do I get this, how did I get my videos on this forum with this marketing videos? No, I'm not marketing anything. I'm talking about trading. There's no advertising, there's no selling here. I don't sell indicators. Okay, you know, why do I have to keep telling people that? I don't understand why they are so focused on what I am doing or not doing. It's like they think I'm trying to get away with something. It's like I don't sell. If I wanted to have an indicator business, I would have opened an indicator business back in the early 2000s when I was trading on TradeStation. I mean, if I really wanted to. I didn't want to. That's why I post the code out there for free. And if somebody wants to send me a donation, that's up to them. There's no arm twisting. It's that simple. So I don't even know why. And like I said, the whole donation thing wasn't even my idea to begin with. Okay, enough of that nonsense. Back to price action. This is all we're talking about here is price action. So we can look here and we can see it made a high, failed to make a new high, open below the previous midpoint here on M5. To me, that is a short opportunity. We're right here at the double O. I hate that fifth digit. Psychological level, we just take that cross, and usually you could, if you're scalping, you can usually get 1 to 5 pips. There's your 1 pip pretty quickly. And I just noticed I don't have the spread dots on here. I need to put that on this template. And as you can see, we're looking at the weekly. Why? Okay, we know about the Wick zone here. Let's see, where is it? It's one of these. Yeah, the Wick zone. Now, this is daily. But if you think about it, I think I might have mentioned this earlier. If you can see the reversals off of the high and low of the weeklies, if you catch one of those, you could be in for a long ride. So for example here, if you caught this weekly within 20 pips, say you went short at 20.68, well, you'd be 68 pips to the good. You had a potential of being, let's see, how many pips to the good? We said we're going to start at around 68. You come down here, 157 pips. That would have been a sweet trade. Or, right here, if we look at the low, well, the weekly low, how far are we? 83 pips. So take 20 from that. 63 pips. Not bad. Not a bad trade. So that's just something to think about. You can apply the rat zone to the weekly, 20 pips within there. Then basically just doing that reversal. Just like the weekly wick zone as opposed to the daily wick zone. You can see right here it got into that wick and then it dropped. That's just, once again, just taking what you have and then adapting it to other situations. Seeing that what works on one time frame is going to work on the other, and if as you move up, then you can probably move up in the pips that you collect. So, and then somebody asked me, actually in the Pal Talk chat room, 2% Club. No, that's not marketing. I'm just saying where people can find me. I guess sometimes I get a little sensitive because I just get tired of hearing that nonsense over and over. It's been years. They were asking me, they said it took me 6 years or something to do an indicator. They were looking at an old term trade video where you see at the bottom of every let's go to the daily here. We've got the top here on the euro, this high. Actually, we can even go up to weekly. You see here at the top, you've got a, actually, rather than you do it this way, because let's put it on this chart, let's do weekly. Okay. You see here at the top, you're going to have a red candle followed by, okay, you're going to have a green, at the top, green candle followed by a red candle. Guess it's still early. That's going to happen at every reversal point inflection point, whatever you want to call it. This pattern is always going to happen. A bull candle followed by a bear candle for it to go this way. It's always going to happen that way. Always, always, always. And how I came up with the turn trade. Price turns. When it turns, it's going to be turns down will be a bull followed by a bear candle, or a green followed by a red. That is just the way it is. At the bottom, you can see here what happened. We had a red candle followed by a green candle, and it made its turn. Right now, put in a new bottom. You say, well, that's a green candle. Well, that's a doji. But the thing is, red was followed by a green, and then price went the other way. So this is what is called a turn trade. Okay, turn down, turn up. Now he was saying that the last candle indicates this, but yes and no, because sometimes you see the last candle, or last red candle would be this one. Okay, if you're here, and the last green candle would be, the current candle would be green. Okay, then if you go here, then this would be the last green candle because it's current, and this would be there. Now I could always go back one, but we don't really have to worry. Actually, I think is that the way it works? I can't remember. It's too early. I have to put the indicator up, and I'll put that up on another chart. The point I'm trying to make is that turn trade and last candle trade, sometimes they're the same, sometimes they're different. It's once again, these systems, methods, and things that I come up with, they're usually all based right around the same simple concept. It's usually horizontal lines. In this case, it's a candle color. It's, and this pattern is going to repeat itself. Here, we hit a top, we had a turn. So this is a turn, okay? This is a turn. So whenever you see a flip-flop, change of color from one candle to the next, I consider that a price turn. And it works on all the different time frames. You can see it here. It turned down. Here it's turning up. Here it turned down. Now it's turning back up. Okay, that is the turn. So it's a little bit different than the last red, last green, but they do share similarities. And once again, in the first video, I told you about logic. And you see, if you take symbolic logic, you'll understand those types of things. Also, something else came up. What was it? Somebody had asked a question. Now I lost my train of thought here. Let me think for a couple seconds. And once again, you see that double O trade would now be worth, what, 7-8 pips. Right here, the psychological trade. Now, of course, when it came down, the candle would have been green. You would have been trading against it. Why would you do that? Well, and you say, well, it made a higher high. No, it made a lower high. This is what you're looking at. You see, lower high, higher high, lower high, lower high. Sometimes that's confusing for people. Now, if this candle was green, okay, then the next candle bumped up, yeah, you would probably wait. But see, we're taking the psychological trade. So sometimes these different trades, one will counter the other. So you have to know what you're trading and why you're trading it. And the thing is, it doesn't matter what color the candle is right here. The price is heading down, okay? Now, I know that sounds counterintuitive. It goes against what I said. But price is moving down. Which way is price moving? It's moving down at the line. So forget about colors, because we're not trading colors, we're trading price. We're trading the movement of price, okay? And so I just want to make that clear, because if you didn't have this chart and you were watching the tape and you saw it going from, 005, 004, 003, you would say it's moving down. You wouldn't be thinking about the candle color. Okay, so before I run out of time, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne, gonna go drain the banks.